Everyone, we are going to look at the earnings expectations of one, technology companies in the US, two, the information technology companies, three, Singapore REITs, and Singapore companies' results in this video in preparation of earnings releases from next week onwards. Now, understand that earnings numbers and expectations will move and create volatility in share prices. And as usual, we always preempt you and prepare you before the event happens, not after the event. Now, once again, ladies and gentlemen, if you had listened and watched our last video, you noticed that you would have stayed out of NTT REIT IPO because guess what? You'll be saying, oh my God, the share price went below the IPO price. Instead, if you had looked at our top three other data center possible candidates, that's including Capital Land Ascendus, REIT, Maple 3 Industrial Trust, or Capital Land Ascendus India Trust instead, you would have made profitable gains just in 1 week. You can see, for example, just look at Capital Land Ascendus India. It was ranked as one of the top three data center in our last video. And guess what? This stock has been on a walloping 8% in just 1 week. So we have listened and watched us in our video. As you have seen it, you would have made a profitable gain. And so let's hit on to this week's video where we analyze for you and prep you for the second quarter earnings. So to begin with, let's start with something nice. You can see from this chart that since the beginning of the year, the earnings estimates for S&P companies, the top 500 companies, have consistently been degraded from 12% expectational growth in the second quarter of this year down to as low as 5%. As you can see in the latest as of today, the expectations is only growth at 5%. Now, this is a wonderful because it's sort of a lower the hurdle rate of earnings expectations for investors, meaning a bit is a higher probability because of this. But look no further, ladies and one thing I like is that there are only three sectors that will deliver positive growth. And one of them is the sector that we have loved for you in the last 2 decades, and that is the technology sector. It is one of the few sectors that will deliver strong EPS growth, and that earnings expectations is going to come in at 11.8%. As you notice, ladies and gentlemen, one of our core strategy that we have been telling you and sharing with you in our investment classes, as well as our videos in the last few months, is that one of our core strategy is that in the age of artificial intelligence, you need to establish core positionings and long-term positioning in the top six technology and the big tech companies. And that's because essentially with higher capex spending, AI through GPU and chips, advanced chips, and now in the movement towards generative AI, that's going to power tech growth. And that's why you're still seeing double-digit earnings growth for tech sector, beating the S&P by 2 times. Now let's look this chart, ladies and gentlemen. This is second quarter 2025 expected revenue and earnings growth. So you see, look no further, ladies and gentlemen, in terms of revenue growth, we are looking at 5% growth. But in terms of earnings per share growth, it's only at 3.9%. As I said earlier, this is great because the earnings expectations hurdle has been lowered down. So look no further. Look at essentially our core strategy of hiding behind the big tech, which with profitable gains. Let me just share with you. In past videos, you can see that I've shown you my positions in the other big tech companies like Google, where we have almost a 3 million stake, Microsoft, where we have almost a 2 million stake, Apple, Nvidia, And in this week's video, let me share with you, why I still hold on to my Amazon despite sitting on a quarter million in terms of profits. Yes, ladies and gentlemen, this is the screenshot of my holdings of Amazon capped with my private bank, UBS Singapore. You can see that the first circle, that's the stock Amazon, AM second. You can see, ladies and gentlemen, my cost price, if you look below, the cost price is 168. As of last night, Amazon is 225. Yes, that gives me a walloping gain of 33%, as you can see in the second circle. So translating into Singapore dollars, my gain is 242,828 as of last night, bringing my market value to, as you can see in the box there, 961,000. That's almost $1 million. Yes, ladies and gentlemen, 3 million in Google, 2 million in Microsoft, 1 million in Amazon. I won't tell you how much I have in Nvidia and Apple, my two other stocks, but essentially it's not small. But this, if anything, ladies and gentlemen, exemplify what we've been telling you and sharing in our classes. We do not waste our saliva in our classes. We do exactly what we advise our GCP global investors in our classes, commensurately with respect to our position. And that's how you multiply and build wealth in technology stocks. And that's one reason why I continue to hold on to Amazon, because I reckon this coming results is going to show that AI, particularly through AWS, is driving earnings even further, justify the increase in the share price despite sitting on a quarter million gains. And that's why I'm still holding on to it. From technology and consumer discretionary, let's move on to REITs in Singapore. Well, this result season, for REITs, what is there to expect? As I said in my bestseller book in Chinese, Making Your Millions in Real Estate Investment Trusts, and in English, both of which are bestsellers in the US and Chinese market, you will see that essentially one of the key things that we have been telling you is that yes, interest rates are expected to fall, but not so soon and not so fast. And what have you seen so far? You can see, ladies and gentlemen, from this chart, the since Trump actually came in as president, you can see that since the end of last year right up to this year, essentially the 10-year bond yield has been in a range of between 3.9 to 4.6%. So it's not indicative of a huge fall in REITs, but if anything, in any results, look for the bottom line. That is, which REIT will deliver good DPU growth for you. That's the one to outbid and to show you the outperformance. Remember, ladies and gentlemen, in our last video where we showed you on entity REIT, right? Even the press wrote about investors should get excited about the IPO. Now we told you that, hey, are you sure? Because really, if you actually subscribe and read the media and subscribe to the IPO, you would be saying, oh my God, I'm losing money because NTT has fallen below the IPO price, 97.5 cents as of yesterday, right? So what is there to be excited about? Yes, maybe the excitement comes from losing money. But anyway, jokes aside, okay, when it comes to making money, it's very important that rule number one is actually obeyed. That is actually whether you can preserve your capital. And in the same video, ladies and gentlemen, I've shown you all good alternatives. And in this, basically, this tree chart, you can see that the top three other alternative REITs with data center assets. Well, now we showed you and I told you that even though NTT showed itself as the top three in terms of co-location activities of data center vis-a-vis in its prospectus, which is only 828 pages. We told you that there are better alternatives like Capital Land Ascenders, and you can see from there, we told you that it's on the cusp of breaking out at 273. And true enough, ladies and gentlemen, in this week alone, the share powered ahead to 278 as of yesterday, Wednesday, 16th of July. Now, the other third stock in our recommended portfolio for data center play is actually Capital Land Ascenders India. Well, ignore REIT, by the Singapore community. And you can see, ladies and gentlemen, from this chart, my goodness, ladies and gentlemen, if you have listened and watched my video, you notice that the share has just zoomed from 1.04 to 1.13 as of yesterday. That is a whopping 8% gain since our last video in just 1 week. So, ladies and gentlemen, as usual, If you reckon that you want to look for good hot tips and hot thoughts, on stocks and REITs, do join us for our class coming in on 30th of August. Very few early bird special seats are still left. Do sign up at our global GCP Global website, for the last few seats. And last but not least, if I may move on, I just want to show you, ladies and gentlemen, that if anything, better investor education, something that we have been pounding on the table for a while, is needed, when it comes to stocks, but more importantly is to help you to make money and multiply wealth in your portfolio. Of course, ladies and gentlemen, if you're wondering why entity REIT, even though where the press asks you to get excited about it, our GIC fund invested and now it's the second largest shareholder in it, is the largest REIT IPO listing in Singapore in the last 10 years. How is it that the share price can still fall underneath and below water? As usual, for deeper analysis, do join our classes because we tell you, as what we have told you in our last video, that one of the things we don't like about the REIT is mission impossible task of identifying what kind of clients they have. As you can see in their prospectus, they've mentioned that their top client, which constitute 33, or rather 32% of base rental every month, is a top Fortune 100 US automotive company. Well, this one I don't think you need to be very smart. It's basically Tesla. Now, does it mean therefore that the fortunes of Tesla is going to dictate how entity move? And mind you, Tesla is one of those, together with MicroStrategy, where there have been single day DTE issued on it. There are a lot of derivatives on the underlying stocks which may cause volatility. So does this mean that this REIT is poised and positioned for this? Now, questions like this is something that you will always answer in your portfolio because for trading purposes, you must know when to keep and those stocks and when to run. And mind you, ladies and gentlemen, trading is essentially part of humanity because at the end of the day, it establishes the values that you want. For example, in our core value system, we think and we reckon that big tech stocks are the one that will ride on AI spending. And essentially, when we move from 3G edge computing to AI, is the big spenders, the one with the financial finesse that will withstand and are able to generate incremental revenue from AI spend. And that's what we focus in our class, the next of which is 30th of August, where we're concentrating of hitting the bull eye with AI on those stocks that you should have in your investment portfolio and avoid, companies and IPOs like Entity REIT. Let's hope we will recover, but well, let's see how it is. Till next week then.